Very well, very well. Welcome everyone. Thanks for joining in. Today we have our chat back, and not all the bad things come. Um, Sometimes bad experience actually bring good things, and we now know that we have a second chat we can use in case of problems. Welcome everyone. Welcome to today's FS3 Tokyo Open Live Room. You are with me. I'm the FibStalker. Hello, everyone. Thanks for joining today. I hope you had a great day. There were a lot of there were a lot of things going on, and we're going to review some of this webinar. Sorry, of this setup. Sorry, in this webinar. And I want to say hello to Sinatra, BW, IBI, Kerry. Hi, Kerry. Hi, Lee. Hello, Desi, Lauren, Roland, JM, Chan, FX Ambassador, Adinda, Jax, and I suppose that more will come in. Thanks a lot for joining in. I want to take the chance every now and then to thank Mauricio and Desi for setting up this show, which we enjoy a lot, and it helps all of us. It helps myself as well to prepare for the evening and nightly trading as I follow the European session as well, and as you can well see from my eyes. But enough of this. Let's get into these markets. Before we do that, let me remind you that you are on the FS3 Tokyo Open Live Room. It's a daily show in which we feature real trading. Thanks a lot for your feedback. A lot of people are telling me that the analysis and the signals and the targets I provide in this webinar are helping them staying in the trades, taking trades, and bringing trades to targets, which is very nice. Thanks a lot to all of you for this. At the very heart of the Asian session, that's when we have this show. With me, I'm Giuseppe Basile, also known as the FibStalker. This is a daily show from Sunday to Thursday from 7 p.m. to 7:45. Now, before we get into charts, I know that we all want to get into charts. Hello, Pankai. Hi, Carrie. We all want to dive into charts, but before we do that, I just want to remind to everyone that your futures in trading depends on how good you are in risk management. You learn risk management, and you kind of sign a paper to become successful in trading. And very often I get this question, and people ask, but why, after 10 years, I'm still not successful? What I'm missing? And there is only one answer to this question. People look into a lot of aspects related to the mechanics of trading, like methods, even money management, timing, and all this stuff, and they never take the time to learn proper risk management as well as its connection to our psychology. So that's the reason why, if you've been struggling with trading, I can tell you 90% of your problems are in the area of risk management and its connection with your psychology. Good evening, Joe. So trading is risky. I consider risk very, very important, as we understand. Trading Forex and its derivatives, futures, options, CFDs, and other instruments with retail off-exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You might lose all or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FS risk disclosure on the website. The information, including commentary and trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. The information I provide you is merely for general information and educational purposes. I, Giuseppe Consulting Incorporated and FS Street will not be responsible for any losses incurred on investment made by attendees of results of any information in this webinar. Before I switch to charts, again, remember 7 p.m. to 7:45, and also remember that there's a great offer for my coaching program if you're looking for a complete approach to successful trading. By no means look at that box above the window, and FH is offering a great entry for this important course. Is going to change the way you look at the markets. I'm going to start a session in May, but I recommend you join before, because the program, which is 12 months, it's actually split in 3 parts. The first part is a self-study, and I want to start the live webinar with you already knowing the details, so that it's easier to actually maximize the learning experience. So let's get into charts, and let's look at good night FX and Basel. So let's look at the charts, and let's see at what has been going on and what's going on here. There are some active trades. Before we get into those requests, I wanna look at the trades that are on, and they're offering good opportunities at the moment. So let me start from the US dollar, Canadian dollar. This market might offer a great entry short, and we are very close. This entry might be given today during the Tokyo Open, or possibly during the European session. That's at 134.50. If the market gets there and your timing mechanism tells you that you have to enter short, that's where you have to enter short, around that area. I have a great timing mechanism, I believe. It's my FibStalker timing proprietary technique, which I call FibStalking, and you can stalk these entries using that technique as well. The Euro Canadian dollar has also been pushing higher into a potential area of resistance, and this market is also a support, which is not an important area going, medium long term, but it has been offering support, and that's the reason why this market has been moving higher here. Has that ended? I'm not 100% sure because of this presence, but what I'm sure is that eventually this market will resume its move lower. I think that the Euro Australian dollar, it's a better play here, and this market has actually offered an entry on the during the European session yesterday, and now continue to push lower. I would like to see this market trading at different level. It will give me much more comfort. So if this market continues higher into that 149.30, that should be a good opportunity for an entry. Congratulations to all of you who took my area of resistance here, which I mentioned with how many days, 1, 2, 3, 4 days in advance. That level had not traded. You will remember I mentioned that. And there was a little bit of pressure on this market, but this level have to be tested. So we will see whether this level holds. I give a finish trade here, and has now the potential to move all the way into previous lows, 107.20. So we covered the Euro dollar there. I see other traders coming in here. Welcome everyone. I have FX Ambassador, Pank Harris, another BW, IBI, starting from the bottom. Gary, Jacksfield, Arinda, Jan, JM, Roland, Lorne. We have Lee and IBY. So let's continue here. The US dollar, Japanese yen, if the euro dollar has started to move lower, we should anticipate a reversal for how hard this might seem here. This is still possible, and market indeed has already, on the smaller time frame, on the 30 minutes, has already tested a number of times this level. So far so good. We are getting support there, and this market could reverse and continuing higher, despite what you see at the moment on the daily time frame. Oops, where did I put it? So I wanted to look at the, let me see, I closed this market, the Australian dollar, US dollar. So we were looking for a reaction in this market. That reaction did not come yesterday, and we had a reaction today, and was not into the level that I was looking for. I was looking for a deeper retrace, which means that jumping extension is trading here at the moment. So this market could still correct into that level. That would be very healthy, and there'll be a safe, much safer long here. Okay, so I'm not gonna act and do anything before I see a 73.70 in this market for a continuation higher into the potentially into the 76 handle there and higher. So we still have to wait sometimes. I mean, the best way to manage risk is just waiting, and waiting is a good strategy in trading. We reviewed. So we have been being asked here, pound, New Zealand dollar, I suppose, which is an odd. It's a bit odd for me, but we're going to review that. Then pound, US dollar, pound, yen. The euro dollar, we review it, so we reviewed it already. So let's review the New Zealand dollar, US dollar here. And this market, on the other hand, has retraced into a level. I believe this market is using another area, and it has already tested that level, so it would have given you a risk-free trade. So that's not a problem with a stop out after that, the day of today. Now this market is moving lower, and at this point, I believe 4 hour is in control here, and there's a possibility for this market to correct into 67.18. That would be in line with the correction on the Australian dollar, US dollar. But there is nothing to do there. Action only if price gets into that level. Okay. Then we have the pound, US dollar, and pound related pairs here. So this market has bounced, after that area that we mentioned in the previous weeks of profit taking. This market is a very technical market, and this market could actually broke price into that 139. We mentioned this level well before the fact, and we knew that there could be some profit taking at that level. So upward for this market that is now trading in extension long. It's for the daily time frame is going to be, believe it or not, 148.85. That's where resistance is gonna be in this market. Of course, this market is moving higher now, and it's moving in extension higher on the daily and 4 hour time frame. So that's where we're going to look for interest at the moment. However, on the daily, we also have to be careful, because we had resistance that has traded, and until that resistance is won somehow, until the back of the bears is broken here, we're going to see this price correcting here a little bit. And this price could actually move for a while within 2 areas. The level I just shown here, the 142.14 and the 141.13 level, that could actually act as a support in this market. Okay, so this market could actually continue lower. If you're in a short, I don't see any reason to risk, because this market, unless you have got a risk-free trade along this area here, very close to this area, there's no need to trade against the current the current trend. As you know, I never shy away from questions, so if you have any questions, you can write them down, or any market that you want to review. I'd be very happy, as always, to review these markets. Next, I've been asked the pound yen. The pound yen, it's kind of in a similar situation as the pound US dollar. The only difference is that this market actually has traded along support on the weekly time frame. So shorts are not really a smart position if not for a very small period of time in these markets. Of course, anything always can happen, and this market can continue lower, but the 154 area as traded. You will remember there was an area of target for us because of the presence of weekly longs. So you have to be very careful in this market, and this market could find support and continue higher into that 164.90 level. Okay. The last one, it's pound versus New Zealand dollar, which is kind of exotic for me. I don't. This is a European Pacific play here that I really don't look a lot because some of these plays are not technical. They don't have a lot of volume, at least based on my analysis. So, as I always say, if they work for you, more power to you, and that's great. Now, let's say, this market has been moving lower and followed some measured moves here. We saw this first one, linking price into that first target. Then on the daily, we saw the market has not traded that next measured move. So I think this market could have a potential for a larger retrace into 1535 here. So if you are long this market, there is no reason to remove this position, but this market should also be reviewed on a larger time frame here to see what's going on the weekly. That's always very important. We always start from a larger time frame, and let's see if this weekly is offering support, because if this is offering support, there is even a better case for longs, as this market is actually showing at the moment. So I believe this market has the potential to retrace all the way into a weekly level here, which is quite a move from 210 to 215. So talking about talking about 500 pips here of move. So this could well be possible. All right, so let's review some other markets. I want to review very quickly the SP 500. The SP 500 has maintained our promises. You will remember that I mentioned a level in the previous days, and that level has been tested today. So congrats to all the short-term shorts who took a short from that high into the level was tested to the tick here. And the reason for that is because, of course, algorithms watch this level very close, and this level is very close. So if this market retests this level tonight, we're going to get a long into potentially 246. Okay, so a retest in this market is a very positive thing. If 1967 breaks, then you're going to wait for a retrace and then try to bring price to lower this price to lower prices here in the 1900 area here. So all the scenarios are open in this market, I believe. But what I believe is not really important, because I already test price and test the market. I never trade my beliefs, and that's the reason why I don't look at news, and I don't tolerate opinions on the market. I really strongly defend myself from opinions in the market, and some people might misunderstand that. It's not. I want to explain this, and this is a very important point here. So some people do misunderstand that behaviors, but that behavior is not content, or it's not a way to project an image. It's really important for my trading that I protect my own ideas and my own analysis from ideas that might come from other traders. And it's not because I don't respect those ideas. I totally respect those ideas. In fact, the final arbiter is whether you make money or not from a trading idea, whether you're capable of protecting your capital, whether you're capable of managing risk and making sure that uh, whatever happens in the market, uh, you are controlling how much is the amount that leaves your account. And of course, by maximizing the opportunity that multiples of that risk come into your account when of course you're right. So I want to state that very, very clear. It's not contempt. It's not putting myself or what I do above others. It's a need of protecting my ideas and making sure that I'm not influenced by other ideas. So that's why, if you come with piece of news and, we can read that, we can have a laugh about that. Um, and actually we can try to see whether there is a relation with the markets, but the reality is that I will never use that piece of news to actually influence my decision. you know, um, and I will always let price decide. And going back to this price here, going back to the price of the SP 500, I think it's very it's very spot on when we look at this chart and when you think about what I just told you, right? You know, this is a level. This level is real. Is there? It's been already tested here. The market has already shown that there is some interest in going long to that level. Now, this is a second test, and second tests are always dangerous tests. But the point is, the market price has to show me its end, and I have a way, and that's interesting, to do what I call price discovery. Price discovery, in the way I call it in my method, is not the process of discovering the most wanted price in the auction process, which actually characterizes and describes the markets. It's no, the way I call it, the way I define price discovery, it's actually the process of analyzing um, price behavior on different time frames and try to infer how price is going to behave based on whether the counter trend time frames are giving up in a way. See, for this 1975 level to work and push price higher, something has to happen on the smaller time frame. As this market moves lower here, there was a structure, and there is a structure in the smaller time frame. Now, the idea here is that if the participation that comes, if it will come at this 1976 level, it's capable of breaking, so to speak, the initiative on the counter trend, right? That's an indication that there is interest in buying these levels, and there is no interest from the short in this case, because you're looking at a long, to keep pushing that price lower. So that's very, very important indication we get. And the beauty of what I try to do is that we can do that without having money at risk. Because usually when we can time on the smaller time frame, the 15 minutes or the 1 minute, we can identify a clear level. And whenever price gets, in this case is long, above that level, that's an indication that the participation that we got from the longs was stronger than the participation that we had from the shorts. And I call this process price discovery. Very often I don't pay a dime for this process, so I don't pay a dime to know what and whether this level is going to work or not. and when I'm stopped out, it's when I pay. But I pay to get information, because now let's suppose that I get long this market. I'm not long this market. I'm neutral still. I will need to see tomorrow whether we get a second test, or tonight, during the European at the open the European session, or during the U.S. session tomorrow, whether this market comes back and breaks the back of the shorts, so to speak. If let's say that I get long and I put a stop below lows, and the lows are already in, unless lower lows are printed before the confirmation level is given. But let's suppose that this market moves against me. So actually it moves higher, and let's say that it doesn't give me a fairish trade. Okay. Sometimes it happens, not that frequently, because when you trade at these levels, very easy to get a free trade. But let's suppose that I get stopped out, and this market pierces the 1968.50 here. Now I'm paying for information, right? I mean, what I paid was my unit of risk that I lost. But I know something about these markets now. So this is a process that I call price discovery, and don't kind of don't quote me if I defined price discovery the process of knowing or understanding what the market is trying to do in different times, because this is not the standard definition of price discovery. Price discovery is something different. It's related to, as explained before, to the market action. But if you quote me, quote saying, it is a process that helps us to understand what's going to happen next. And whether I'm stopped out or not, if I'm not stopped out and I get a free trade, this market can do anything. It can go to target, it can stop me out, it doesn't matter. If the market does not give me a free trade and then it stops me out, I pay with that unit of risk for information, and I'm going to use that information in a profitable way later on. Okay, so not necessarily everything that happens, and it's contrary to the outcome that you would like to see in the market, something necessarily negative. Welcome, Pantelis. So I don't see any comments there or any questions. I hope this little digression here was useful. Because I like to think about the market, but not think about the market and try to factor in all the indicators and all the news and try to come up with a level and a plan to trade. I don't do that. I let the market show me the levels, and if we get a confirmation, there's a very high probability to get a risk-free trade. Once that's done, your job as a trader is finished, basically. When you have set up a method, plan, and you have the will to trade that plan, you have the guts to follow your plan, and you execute it, and you get a risk-free trade. There's nothing else you can do. Because if you believe there is something you can do after that, you're doing a very dangerous assumption. And the dangerous assumption you're doing is that you know something about what the market will do next. The idea is that we don't know. Maybe the only thing we know is how we can, what are the areas where we can get very easily a risk-free trade, and that's it. So in reality, I believe that modern markets offer us an opportunity to study and identify areas where we can easily manage risk in the proper way. But whether that market will get to targets, will go to 2100 or 2200, or move lower, we don't really know. So every time you make an assumption on the market, it's always a very dangerous assumption. Okay, just wanted to share this because I believe it's very important. So to make a long story short, for the SP 500, if you're looking to trade this market, I always like looking at this market. There are different ways to trade this market. You can use SPY, you can use one of the leverage ETFs that have a lower cost, but do not move as the SPY. So for what concern risk management, setting stops, SPY is the best because better tracks cash and the future. Of course, there is the future, which for some of you might be expensive. But there are other options like CFDs, for example. You can buy indexes on, and they're offered commonly by Forex brokers as well these days. So there are a number of ways to take advantage of the SP500, and the SP500 it's widely followed. Of course, there's a lot of volume, and if there is a lot of volume, there are a lot of algorithms as well in it. Okay, dollar index, you remember last week I mentioned an area. That area initially traded and then it was broken. And sorry, I think I'm not tracing this in the correct way here. And that level might have held. In fact, it has held. That was what I remembered. So this area of shorts is pushing price lower. Now that the euro dollar has encountered a potential level of resistance, this market is reacting to longs here. So we could see as the euro completes that move lower, we could see this market going to retest previous highs. Not impossible. Okay, but put always things in perspective. This market has been moving laterally on top of 94.50 area of support, which has been tested 6 times. We counted them, and I believe that eventually this is going to be tested again. Now, that said, if the euro keeps moving lower and the dollar index is going to move higher into what? It's going to move higher into 99.50 and then eventually 170. So if you trade this future or you trade derivatives of the dollar index, keep in mind that this could be the move in play here. Let's see if there are any questions. You're very silent today. We have P Panther as well. Welcome, P Panther. And you're very silent today, so I'm not sure whether I'm seeing any questions. No, there are no questions coming in, so it means that either you fell asleep or you are liking what I say, or maybe you're just plain not listening and maybe watching TV, but that's okay. That's part of the game. Let's see if there are any opportunities that are actually in play here, and if there is anything that is happening on the 4 hour, on the 60 minutes. As I mentioned, I'm looking at, for sure, Scott, I'll have a look at gold. Pantelis, IG, having issue my connection again, in and out for some time now. That's unfortunate, but I hope you're gonna solve that, Pantelis. Also for the nightly trading. And in relation to the euro Australian dollar, before I get into gold, this market has not tested the daily level where we would see at the decisive participation. That's the reason I believe still going up and down here. I took a trade yesterday and took some profits off when I start seeing this rally again. And if this market was to continue from these levels, it would have continued lower and pierced the lows as well, which didn't happen. So there's still some support in this area, and I believe it's because this market has not yet traded that level that I've indicated. That's the 49.30. It's 102. It's about 120 pips away, but this market can move very, very quickly. There are similar opportunities developing in other markets like US dollar, Canadian dollar, for example. All right, so let's have a look at gold. And gold, as you know very well, we in the last 2 weeks we mentioned that this market, after testing the 1196 here, was basically in a consolidation in a continuation, consolidation on top of support. So this market has pushed into intraday highs here. I don't see this market in danger. You know, I don't see any problems with this market. This market is doing what would normally do. I mean, it's very unlikely for this market to now correct and break this level. I think even if it's correct deeply and comes back to this 1996, this market is going to hold. So a lot of commitment in this market, moving this market higher. Can you show us the lower time frame Fury's trade on which market? Blodeira. You know, I typically show the timing and the proprietary techniques in my room or in my coaching program. So, and that's, you know, that's a proprietary technique, and there is also an NDA that I share with my students. So it wouldn't be fair also in you know, in regard to people who do that. But there are some examples that I've given on some of the material that I have online, so you can review that. Let me give you the the link to that, and there is the concept explained, and there are also some examples of applications. And Brodera, if you come back tomorrow, I'm going to show you a recent example. Okay, I want to give you some references because they can be useful also to understand the concept. And or, you know, I can show you the one that I traded yesterday as well. So yesterday we were looking at I was looking at the euro Australian dollar here in my room, and let me put that on the timing here. I can show you an example. You know, you can test this. You can actually sorry, it was the euro Australian dollar. You can actually apply the technique on different time frames as well. It depends which kind of risk you are looking for. And when we look at this move higher here, we trade around the open. One of the setups we have, it's around the open. And the idea here is that we can recognize a structure in the market. Whenever that structure is actually broken, that could be an indication of a start of a move higher. Of course, we have some rules that we use to trace these sequences, and when the sequence breaks, there are we follow the rules that model the sequence in this time frame. And for example, 48.72, that level was broken, and one of the simple trades we have is to trade the breakdown of that 48.72 and put a stop above highs, and then wait for the same distance to be covered as the risk to take half of the position out. And that would be one way to generate a freeze trade. There are different ways to generate a freeze trade. In fact, in the basic methods, there are 4 different ways to enter with different risk parameters and different pip risks as well. So this trade here would have had what you can, you know, this trade here would have had 148.91, 148.72, so it's a 21 plus spread. That would be the risk that you take. But there are other ways to reduce this risk in half, and so there is possibility to take, you know, pretty small 8 pips, 10 pips. That's not uncommon when we look at these levels. And if you have you know, multiple of hundreds of pips in opportunity, like the one that could be the US dollar Canadian dollar very soon here, 134.51, bringing price potentially into 131 here, 130. And for those who have followed me, know that I'm looking at 120.50 in this market eventually in a few months and weeks here. So this kind of opportunity is the kind of opportunity that we try to capture. Okay, this gives a little bit of an idea of how that timing is executed. Now, I mentioned I will give you some sources which you can. Sure, and I did that. Bloidera was asking. You can show in the market just for illustration. I showed that on the 1 minute using basically 50 minutes moves, but algorithms on these high volume markets, and that's the reason why I try to stick to the majors as well as big futures like the SP 500 or gold and silver. It's because they have very high volume, and so they have a lot of participation from algos, and so algos can actually generate that structure on the smaller time frame as well. Indeed, that structure is itself in the 1 minute as well, and if you use other type of charts like tick charts, tick 256 on futures or even stocks, you can see that same structure. Okay, and if you want to have some references, you can definitely go to the FS Street website, and let me show that to you here if I can. Let me see if I can share this. You can go on the website and you can look for some of the presentation I have there. Give quite a lot of details on how to do this. Of course, the full methodology is proprietary, and there are some advanced way of using it. They're very, very precise. But if you go on the website here and you just look for my name here, you will be brought to a page, and there are a lot of free webinars that you can review if you have not done that. I talk about the way you use Fibonacci as well, which can help you understand a little bit the logic behind. And the method is totally experiential. What I mean is, it works because it works. It does not work because there is a fundamental explanation of how the market works. It's not a there is an order of universe type of method. When you have a level, those levels are respected very often. However, I never trade those levels blindly. I always have a timing mechanism that allows us to understand whether to get involved or not. And I believe you might be very interested to the webinars that I presented in 2014, traditional uses of Fibonacci in modern markets, advanced risk management for success, new philosophy. You'll get a lot of this information on how apply this technique. And then if you watch the other randomly the other presentation, this won't hurt you. But most importantly, very often in the presentation at the beginning of them, I do a quick analysis of 8 markets and show examples as well. So probably this can help. So a quick time check there. It's 8:44. So what I'm going to do now, I'm going to start a recap and a summary for this session right now. So let's go back to the chart and let me recap what we have looked at. So we reviewed a few markets starting from the US dollar Canadian dollar. This market has the potential to go down into 120.50. That's a business that will take months. But short term, we have resistance at 134.50. If the market gets there and you have a reliable way of timing entry, that could be an interesting opportunity there. Euro Canadian dollar, we reviewed this market as well, and we saw that this market is reacting once again at that 148, 47.95. We saw participation 2 days ago. Again, we saw participation today on the short side, but we have to be careful. There are better markets. This market is being pushed on the upside on the weekly time frame as well. Congrats to those of you who actually looked at that level I provided with 4 days in advance, 110.50, and the market has actually reacted that today, and it keeps apparently pushing lower. This level could be retested again, and if that's the case and it does not move higher, that could become an opportunity for shorts. Euro Australian dollar, very interesting market. Unfortunately, we did not trade into that equivalent of the US dollar Canadian dollar 50% of 149.30. If the market gets a bid and is brought into that level and trades into the level in the European session tomorrow, and or in the US US session, we might have enough time to move away from that level before the ECB on Thursday. US dollar Japanese yen, for those who follow me, know that this market has the potential to retrace into two levels. The levels we are watching are the 116.30, 40, and the 118.40. And if that market, and that would be compatible with the US dollar moving lower. US dollar moving lower here would actually more than likely produce a rally in the US dollar Japanese yen. Okay, we mentioned the Australian dollar, US dollar. We mentioned that deeper level where we would want to see this market to safely trade longs. If that happens, if the market gets into 73.70, that's a long into first target 75.36, potentially even the 75. Let me say it again. First target would be a 75.30, and second target would be the 76 handle, or a little bit higher than that. We then reviewed some of the pound-related pairs here, and we mentioned that the pound US dollar is trapped between 142.50, 141.10. The pound versus Japanese yen is traded at 154 level, and it has the potential to get a bid for a push into 164.90 and even higher actually. We then reviewed the New Zealand dollar US dollar, which is still correcting, and this market could actually, worst case scenario, could retest 66.18 or 67.18, sorry. No need to exit the long. We enter long this market at 0.65. We are looking for a target at 68.50, so 300 pips above. And then we gave a final look at the SP 500 here. We mentioned the level that we identify in advance, 2 days in advance. We had that level there. After we tested the second target 2003, this market kind of had to correct. Now, the market has to do nothing for us, but we know that very often those that profit taking can bring price into those targets. So a retest tomorrow of this, a successful retest tomorrow at this 1975 is going to push price way higher into the 2046. Let's don't forget, on the weekly time frame, this market has defended the weeklies have defended this area here. This could be the start of a new rally, and you know, three triple highs are very rare events in the market, and I believe that if this market gets to previous highs, you're gonna see new highs. Okay, still trading in extension at the moment. And finally, we reviewed gold. No need to be worried about this market. This market is doing whatever it has to do. There are targets above, and you know, this market is naturally retracing here into the next potential long, and actually is testing that level. Okay, so this is it for today. I hope this was interesting, and this was useful as well. Thanks a lot for being here today. If you like the show, if you like the ideas, and you're trading them, I would actually ask you to kindly tweet and retweet the show so that we can actually grow the show and keep it as well on FS Street. So if you help me, you know, if you think this show is helping you, what I ask you is just to help me in return, and just tweet the link that you see on Twitter, so that many other people can actually come in, and we can have active sessions as well. Today probably you were a bit tired like myself. It's been a long night for me, up till 4 a.m. Timing these markets, and because I'm based in Canada. And so I didn't see a lot of questions. Usually we get way more questions, but that's okay. You know, it's normal having cycles where we go from moments which are more energetic and excited, to moments you know, in which we accuse a little bit tightness. But thanks a lot for being here. I hope this was interesting. If you come every day from 7 p.m. to 7:45, we are gonna review more and more of these ideas, and I'll give you an updated view of what's going on in some of this market. And as usually, I will kind of put in the mix also some of my ideas, or some of my ideas about trading, and my experience and things that I've learned in my now over 15 years trading. So thanks a lot for being here again, and I'm gonna leave you with some charts. Yeah, I'll let you think about the SP 500 tonight. Have a great one, and thanks a lot for being here. I'll see you tomorrow at 7 p.m. Okay? Thanks. Bye-bye now.